Happy Wednesday, everyone. It's the middle of the week, the 29th of March, 2017. Thanks for joining me today on another Trader Bite. Quick discussion of the markets pre-open so we can set out a plan for the day. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall um, the overall market stance this morning coming in on the U.S. overnight session is slightly bullish. It's not by far. It's not bullish by far. The Russell, for example, which was leading down, then leading up yesterday, is only up half a point. The S&P up 3 ticks to 4 ticks just now, and then the greatest gainer this morning is the DAX at 57 points or 0.47%. The DAX is off of its high by about 20 points, so it got as high as about 77 points, 78 points, something like that. The laggards today are uh, the euro being down 52 pips, and then gold is down $2.90, trading at $1,252.80. That represents 0.22% on gold. The market is paying attention to Brexit. The Prime Minister's meeting with Parliament started, and she's taking questions. Overall, global trade has been reported to be growing the fastest pace in 70 years. Global trade in goods increased 2.4% in volume terms during the 3 months that ended in January, making for the fastest growth since August 2010. Other than that, looking at the news feed, my key news feed here, there isn't too much to report. The ECB said to be weary of making fresh policy shift in its communication at its April meeting. Expects things to stay as they are. Anyway, so let's move past that. You guys have your own news feeds and can look things up. As far as what we're expecting going forward today at 10 o'clock Eastern, we have U.S. pending home sales month on month for February, 2.5%. At 10:30, we get crude oil inventories. Crude inventories are expecting to show a surplus of 1.375 million barrels. Distillate inventories expecting to show a deficit or a draw of 1.1 million barrels. In gasoline inventories is expected to show a draw of 2 million barrels. Just as a frame of reference, last week we got a surplus in crude of 4.954 million barrels. That's quite a bit above the number, and we ended up taking a bit of a crater on that. Oil last week traded down to 47.01 following the release. So those of you who are trading oil, of course, I'm sure you're aware of it. You need to pay special attention to that release there. It's like the crop report in trading places. At In about 10 minutes, 15 minutes, we have Fed Speaker Evans coming on to speak about the economy and policy in Frankfurt. And at 11:30 Eastern, we get Fed Speaker Rosengren speaks at the Economic Club of Boston. And then at 1:15 Eastern, we get Fed Speaker Williams speaks to the Forecasters Club of New York. So those comments should be coming out at that point. As far as what we expected yesterday, given where we opened, given what we accomplished on Monday, the primary expectation of the auction was to proceed as normal. We expected it to push higher on the open. We were opening in range in value, so the expectation was for a choppy open. So that's what I represent here. A choppy open, and we expect it to push higher into the prior day's point of control, which was 23.3850. We also saw on the overnight session that we left a low volume node there, so we expected some resistance initially at that point. If we do get resistance there, then we're looking for a lower high a lower high and then looking for a rotation down, and then that would target the lower end of the range yesterday, and a key target will be this MC point of control, which we hit by a tick, 2 ticks the other day. That was the primary hypothesis. The primary idea yesterday was for sellers to step back in now that we had hit the point of control, the key point of control, 23.40.50, the prior day on the nose. The market seemed weak coming in, so that was the key trade of the day. That absolutely did not work out. It absolutely did not work out there. The secondary hypothesis, so because we're opening in range and we had trended the prior day and we're back into the 5 day range of consolidation there, four prior sessions of consolidation, the expectation is that all of this energy then it continues to build up and push to the upside, and that's what ultimately ended up working out. The target, the extended target, which was beyond the range that we had yesterday, is 2360. 2360 is a key price area. It represents the single prints or a low volume node. Um, Low volume node from the sell-off day of last, what was it, Tuesday of last week. It also represents the MC point of control before that, and it becomes an area of key resistance on a first test. That was what was expected and ultimately ended up being the high of the day, the zone that is the high of the day. But overall, I did not consider that into the extended target range for yesterday because of our daily range stat. Yesterday, I'll show you on the daily, yesterday's range stats were outside of what we would consider um, normal, right? And so the target that was expected yesterday was around 2350 to 2352, this box right here, which represents resistance from way back here, which builds into the low volume node. If you guys don't understand these terms, low volume node, OTF, whatever I'm using, it's really simple. Just go to futurestrader71.com /glossary. It's all there. It's all laid out, some with illustrations to show you what I'm talking about. And then there are a ton of videos all over the web that website, my website, to explain some of this in detail. So check that out. Don't be discouraged by the fact that you're not understanding what I'm talking about if you're not familiar with it. It takes a little bit of time, just like with everything else we learn as human beings. It takes a little bit of time of discomfort before you start to figure out what's going on and to play along. So yesterday, the key idea, secondary idea, if on a failure to push lower, would be for it to start trending higher and to finish near highs, which is basically what we got. Here's what actually happened. So nice big swing on the open. It looked like it was driving. I issued a warning to shorts early on, and then it rotated past mid, pulled back to mid right there with a continuation. This looked like hypo 1 was in control right here. So expecting a test of the low volume node right down here, the prior day's low, 3150 or so, expecting a test of that, and then looking for a pullback to the open at 34.75 and a continuation lower for hypo 1, right? That's what we looked for. Once we saw that it pushed with strength this way, it found its sellers and it rotated all the way back to the open. That's usually, and the market is, random in what it does on each and every outcome. Usually that shows us that's a very clear indication that buyers were present on the market. Market on open orders were on the buy side, and those buy orders were exhausted. They were confronted by sellers. The next rotation down takes us deep into where we started from, which is the open, and then we get a continuation trade. And so what that does is it tells us that sellers are likely to step in and stay in control and to continue pushing. So the only information we have at the time is that to stay off of the longs and to go sell side once the market crosses that mid and comes back to the open, and the first setup is right there at the mid at 23.37 on the dot. For a continuation rotation, and then we expect it to pull back and get another continuation. There's the second setup on the mid on the dot, 23.36.50. So you had two chances to jump on here, except the second rotation was a bit of a sucker's rotation there. And then once it breaks through with this impulsive move up, then we say hypo one no longer works. That's generally a loss. That's going to be a loss. And now we're looking for a pullback, chop, continuation, and what it did is it pushed all the way back almost to the open again and created this pullback into the 3650 range, which if you're looking at order flow showed there was a nice zipper box there with heavy volume in this area that presented some support. And I'll show you, since it's Wednesday, I'll show you what the order flow setup looked like. We'll talk about this particular setup here in a minute. And so hypo 2 is on like Donkey Kong, as they say, and then the target becomes the next point of control up, which was at 48. That was the key target that was mentioned yesterday, I believe. Let's see the first target right up here. Oops, don't. The first target right up here, 48. The extended target around in this box at 52. So that's what I was looking for coming into this push up. So we get the 48, we get the small rotation, we push up, pull back to 48 right here. Very orderly auction yesterday, despite the trend day. Very, very organized trade. Once you recognize that the sell side is off, you had the pullback right there, and then the next target gives us that we're given is this 50-52 area, and that pretty much ends the trade. I did not expect it to go to 2360, the MC point of control. Let me turn on the flex levels. You can see it up there. This level right here, 2360. It's also the single prints from the sell-off day last week. It pushed by 2 ticks and then a rotation down, a battle and a rotation down. Yesterday was a trend day. We pushed 2 times IB. So 2 times the IB is this dotted line right here. We extended the morning's range more than twice. That's another indication that it's a trend day. The additional indication is a point of control in the upper quartile of the range, which we got. Lots of energy up here. And then we sell off, so we consolidate. We're just not able to find the buyers again. Well, for those folks in the S5 chat room, I warned again and again that this is a key resistance area. Do not step in for a breakout from here. Or I suggested it, and so it battled up here and then it released to the downside. Now, when it reopened, the market pushed the overnight high right up against that point of control. You see that it missed the overnight high for the session, is a tick short of the point of control, and then it's just a couple of ticks or a few ticks higher than the 2348. So it's a very well contained overnight session, and that's where we left things. Here's a thing that you should note, or at least I think you should note. What do you see about the delta here? For those of you who don't know, this is the volume delta, which is the difference between the buy volume minus the sell volume. So this is buy volume minus sell volume. So buy volume, so if there's a lot more trading on the offer, so aggressive buyers, then there are aggressive sellers, then this line is going to continue rising. This number is going to continue rising. If there are more aggressive sellers than buyers, then this line is going to become more and more negative or become get reduced, right? So because the volume on the negative side, on the sell side, is bigger than the volume on the high side, right? So we expect on a trend day, we expect the delta to be rising. We see the delta rising here all day, don't you? But look at the delta for the large prints. The delta for the large prints, for the smaller traders, is very weak, right? So delta for the large traders is fairly strong. The delta for the small traders is uh, fairly weak. The participation here tells us that there was OTF present here all day long. If these numbers are correct, this represents, you can see the delta on the 43 lots or less is negative on the day. Stayed negative all day long. No participation there at all. And then the overall delta for, well, let me check that. I verified this yesterday. Yeah, okay. So the large lots were participating quite heavily yesterday. And so this was an OTF driven. If it's OTF driven, it's an indication that it's likely to be OTF driven. If it's likely to be OTF driven, then this is probably a sustainable run. This represents a sustainable run. We saw the same thing yesterday. There's no rollover. There's no hanky panky with volume right now. It's pure volume as it is. And so yesterday we saw the same thing. We ended up with a strong, or Monday, we ended up with a strong trend, yet the smaller lots were not participating as much as the large lots. What this indicates is these runs up are likely to be sustainable. These are likely to be sustained and orderly in nature. Oops. So I'm looking for this channel to continue higher. I would suggest yet again that those of you who are holding a swing short look into options to buy insurance or to reduce. This could be a sustainable run um, through the next few sessions. And yes, this volume is reconstructed by IQ feed. It's fairly accurate. It's been checked. So it's it's really something to behold when the delta shows up that way, when you have the large lots just absolutely pushing through. Okay, so I just wanted to point that out. I'm getting a little lengthy here. Overnight, lots of volume at the low end of the range. This looks weak to me on the open. I'm expecting it to push lower, but I'm expecting overall for this to hold. So overall, the overnight session, you can see here, moved towards the point of control and has shifted lower. We're at the point of control, the overnight point of control. We remained under yesterday's point of control, and it looks like it is fairly heavy. This is a double distribution profile, but it's really a B shape profile, which shows a little bit of long liquidation before balancing. So that's where things are with the overnight. As far as our hypotheses for today, let's kill this. This morning, the expectation is for the market to get into a selling mode on the open. I'm looking for a bounce here at the 2341, 2340 area, the old point of control here, and you could see there's a fair amount of support in this area. There's a point of control, there's a low volume node. I'm expecting a bounce at least on the first try, and I'm looking for the market to push back up to 2357 on the primary hypothesis. Again, these hypotheses follow the same auction process I always follow. I don't change it just because I feel different today. I have to be objective, okay? The secondary hypothesis is for an open auction, a test higher that fails, and then a push for a bounce at 2341, 2340, and then for it to break through and then go sideways into the rest of the session. It is Wednesday, so we do expect a little bit of volatility, not as much as we do Tuesday, but overall, those are the two key hypotheses for today. Just to see what I'm talking about with regards to the range, this is a chart of daily. These are daily bars, RTH only or pit session only. And what this little chart shows down here is it shows statistically when we take the combination of all of these days, this is range right here. As you can see, this is range, and it shows the days range from low to high. And what this delimits right here is the what we would consider to be normal. So what is normal in the S&P as far as range? The most common is 11. On the low end of normal is 7. On the high end of normal is 23. So on any given day, if the range is between 7 and 23, we consider that to be a fairly normal day. Now, as a trader, you're going to think if we go from 22 points down to 7 points or 8 points the next day, you're going to think that's not normal. It is, because it's well within the first standard deviation, and that is by definition normal. Okay. Yesterday's range, you could see here, was just above normal. I generally plan for 11 to 15 points, which is the most common on the upside, 17 to 8 points, 18 points on the downside. That's what I'm looking for as far as range of my targets for the day. Anything beyond that, I consider to be just cream, just cream on top of the cake there, if you can get some of it, and that's and that's just the way it is. So yesterday's range was pretty wide compared to historical values. Okay. Anyway, I'll leave you with that. Hopefully, you're still concentrating on working on your errors, cutting your errors out, and having a plan every day you come in. It's very, very important for your career and your development to come in with some sort of a plan and then see how the market plays out and keep track of what your response is and if you committed errors relative to your plan. Good luck, and I'll catch you tomorrow.